This is a chart which is a spoof. This is the ugliest chart I've ever done on Bloomberg, and I can only do this for the sainted Tony Dwyer.
Ugly charts.
The white line is the inverted yield curve heading down towards the doom and gloom of that red oval, and the yellow line is the stock market. And you say we need some yield curve myth busting. What do you need within the convolution of this joke chart? What do we need to understand about yield curve myth busting?
This is likely, while it may look busy, the most important chart in investing for equities in the U.S. Because when you look back, look at where that white line goes below the horizontal blue line. That's when the yield curve inverts. That's been a buy signal. When you look back historically from the point that we're currently at on that white line to the point where it drops below the blue line, there's a significant rally, more than almost 20% rally typically in the last two cycles. And then once you go through that blue line, you even get more upside until the peak of the bull market. So to suggest, again, that you should get nervous about equities on a sustained basis, honestly, it could correct any time.
Right. And Paul, to be clear, we need to understand how distorted our fixed income markets still are. They're not anywhere near accommodative or normal to an economist or to a financial guy.
Absolutely. I mean, QE, not just in the US, but abroad, has vastly distorted particularly the long end of the market. And so probably this chart gives a misleading signal of how close we are to inversion.
See, I totally disagree with your premise, Tom.
Okay.
I totally disagree that QE is doing something different than the Fed is manipulating the yield curve. Well, no kidding. They do it every cycle. They drop rates. Remember when Alan Greenspan said in 1998, we will never see this level of rates again? Did he mean on an uptick? The Fed always manipulates the curve to stimulate economic activity.
Gentlemen, thank you so much.